Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
What I would suggest that you guys do, for those of you that are still not really familiar with what these FX options are all about, is visit and I'm just going to jump ahead to the end, to my end slides here. My end slide is visit the fxoptions.com, and you're going to get all the insight in the world that you would could ever need with respect to what these pair values are all about, and how these are how they are priced. I'm going to take a couple more questions, and I'm going to have to button things up for the evening. But Kev's got a question here: are these stock options or FX options, and approximately what is the commission per option? These are currency options. So these are options based on the underlying value. If we go all the way back, and I don't know whether I can, maybe I could take it all the way back to the beginning here. Bear with me. So if we go back to this beginning slide, these are options whose values are based on the U.S. versus the Australian dollar, the Brazilian real, the British pound, the Canadian dollar, the euro. So every one of these pairs here, these pair values, are based on how the U.S. dollar is trading against any one of these specific currencies. And as such, this gives us the ability to trade our views on the U.S. dollar against any one of these particular currencies. Now, they trade very similar, as I mentioned, to equity options, except for the fact that they're European-style exercise, and they are cash-settled. And the reason why they're cash-settled is because there is no underlying shares that trade in this particular market. Now, your commission per option contract, whatever you're paying at your current broker with respect to your equity options, is exactly what you're going to pay for your FX options. So there's going to be no difference between what you're paying now for calls or puts on RIM, for example. There'll be no difference between paying for your RIM puts versus paying for your CDD puts or calls. So hopefully that answers your question. Finally, Patricia just asked a question with respect to why not do a July iron condor instead of an August. Absolutely. I mean, if you want to increase your probabilities of the options expiring worthless, certainly you can do the nearer term. I went out to August simply because we're already within the July expiration cycle, and I wanted to try to collect a little bit more premium, this is why we looked at August. Just understand that the shorter the time frame we implement these credit-based strategies, the less premium we're going to collect, but the higher the probability that we're going to be able to collect that in higher entire premium. So on that note, guys, I'm going to wrap things up for this evening, and I just want to thank everybody for the opportunity to present Elanit. It's always a pleasure to be online with you, and everybody take care. Have yourselves a wonderful evening. Of course, if you have any questions, comments, concerns, etc., you know that I can always be found by contacting Jason at optionsource.net. I'll just simply type my email in here before I go, and you guys can certainly get a hold of me using that email address. So, guys, thanks once again. Elanit, always a pleasure, and everybody enjoy the rest of the week. And in fact, a shortened week for my Canadian friends and a long weekend for my U.S. friends. So take care. Bye for now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.